Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I'm joined by Dave Lukas. Today's Monday, the 3rd of March. We're getting into spring here pretty soon. And waiting for the market to kind of spring somewhere. We've seen nothing but distribution for the past couple of weeks or so. And it's right off of all-time highs too, which was a little bit of a surprise that we talked about last week. But yeah, kind of a nasty week, but a good end to it. And then today, boy, I'm sure we'll talk a little bit about the news over the weekend for crypto and the strategic reserve. That's going to be, but the market just does not know what to expect, and we're seeing that right now. Just this sort of sense of uncertainty and just sort of the edge of its seat every single day. And the problem right now is that we can't seem to keep any kind of gains. Like today, we gapped higher by 30 handles or something like that. And
Hmm.
man, within the opening range, the first 30 minutes or so, down she goes. What are you seeing out there, Dave?
Yeah, it's that same thing. I mean, today was looking fairly good, and then we had ISM come out in the morning, and that kind of stifled it. And so we were actually working on kind of a flat day, which after Friday's move would have been really nice, flat to just slightly up for the day, kind of cement it and everything. But the around 12:45, Trump announced that we are going to do tariffs on agricultural products coming in from other countries on April 2nd. And so that gave markets kind of that reason to get fearful. But I don't be surprised. It's actually kind of starting right now to see a rally into the close today, and rally this back up. We may even get back to even. I had to send an alert out to my students if you're watching on just that one little SPY trade that I've been working. If you're patient into the end of the day, you can still make the moves that I said to do on that. I would just 3 o'clock hour, wait and see because this we could see this thing go skyrocketing back higher into the end of the day. And if that's the case, great. I'd like to see that I'd like to see us come back some. I don't think this tariff announcement is anything that's major that's going to really destroy anything, right? I think the market just anything that comes out that's not priced in, you get the initial reaction and then people settle in with it and everything else. Now, tomorrow we got more tariff announcements, right? So tomorrow is when we hear about what's going to happen with Mexico and Canada. So you're going to probably have, some of that stuff going tomorrow. We got jobs on Friday, so this is a lot of news this week. I expected the first half of March to kind of continue like we saw in February, be somewhat volatile, be kind of, no rhyme or reason. And then I think end of the quarter, we get past some of this stuff. I think, you're gonna kind of see some rally go on, and then I think we rally, and get some gains as we get into April and stuff. How long that lasts, don't know. You and I have been saying all bets are off in 2025 just because this economy has been propped up by debt. And if you stop spending that money, that's why the other thing that came out is if anybody's seen from Friday to today, the Atlanta Fed GDP was at 1.5% for the quarter. Then it went to negative 1.3. Today it's like negative 2.8. That's all because we're cutting that debt spending and stuff. So I think the market's got a lot to deal with. So if it can hold in here and just, not fall off a cliff, I think that's actually a win right
So,
now.
Dave, do you think, like, and I hate to do this, but it just begs the question:
Hmm.
by the end of the year, do you think the S&P is above or below 6,000?
Uh, I think as of right now, above 6,000. I think that the first half of the year, this first quarter, and actually, if you look at historically with presidents in their first quarter and everything, this is actually very normal action. And you can think about it, right? You have a new administration that comes in. Markets used to what the old administration is doing. The new administration in the first 100 days is when they do a lot of things. So you get kind of that first quarter, kind of volatility around, okay, what's this mean? And markets trying to decipher it, figure out. Now, Trump is moving like lightning fast. He's moving faster, doing more than anybody's probably ever done in their first, 100 days or whatever. So that to me is something that is probably playing a little bit more havoc. But I think this market, once we get through some of this, once we get some of these trade deals finally worked out, set, as well as some of the other things that they've got going on, like the tax bill done. Once that, obviously the market's going to really like it when, the taxes are set and all that stuff. That brings certainty. So I think the back half of the year actually has, more potential for the growth than the first half of the year.
It's amazing that we're, what are we, 3-4% away from the all-time highs,
Yeah.
and
And
we're
extreme fear.
extreme fear, extreme fear. I'm
Like
not
we're in the
sure.
depths of a bear market.
Yeah, it certainly feels like we're in a bear market. Then you look up and you're like, oh, well, wait a minute, we're just inches away from the all-time high. This is kind of what we went through back in April,
Hmm.
and this is also what we went through back in July and August. Was just it, and it tends to snowball. Like what I
Hmm.
find is that things tend to happen in threes or groups like this. Like all of a sudden something happens to kind of knock the market off its perch.
Yeah.
And I don't know that we've necessarily seen what I call a shot over the bow, which is like one of those like, oh my God, something's really happening here. We really haven't changed character that much. Yeah, there was some change back in December, but not to the degree that something like when we started on the bear market in 2008, it had
Hmm.
been going on for quite some time, and it was already just like it was just one shot after another,
Right.
one slap in the face after another. There was a sock gen, and then all of a sudden the Bear Stearns comes down, and then it was you
Yeah.
know Lehman Brothers, and it was just one thing after another. And that's what I find happens with this type of environment is like, okay, so all of a sudden tariffs are like a big scary thing, and then all of a sudden something else happens, and
Yeah.
the market just can't handle any kind of bad news right now. And what we're starting to see is some of these reports, some of these economic reports are starting to come in negative,
Yep.
like jobless claims starting to go a little bit hot where it was like so good for the longest time, starting to go a little bit hot. I don't
It's
know if
because we're
that's
getting
because
the
of
it's because
Doge.
we're getting the real numbers now. I don't think anybody believed the labor reports for the last few years.
Yeah, there's
You
something
know,
to be said for that. There's something to be said for that, that we actually probably have. So the BLS is probably like, oh crap, we better.
the BLBS, right?
Yeah.
Because I think I mean, look, we know it. Like it's not like I mean, you can make those numbers look however you want them to look, right? And so I think actually it was interesting over the weekend. Ludnick had an interview with Bartiromo, and she was pressing him on GDP, and they're going to take the government spending out of the GDP and everything,
Oh, I
and
saw that. Yeah,
change how they do that.
because it's not
So.
just government spending; it's government headcount.
Right, they're going to take that like that's a detractor. Like they're taking that out of GDP because it's not a production. You're not producing anything by paying those people,
I,
right?
I,
So like
I thought it was brilliant. Like, okay, wait a
yeah,
minute. So you're telling me we got 1,000 people to generate what the number is for the GDP, and that
yeah,
goes into the same
you're
number.
going to count that like
Yeah.
so it'll be interesting to see how they actually put out the GDP and what it really is because there's all these archaic measures. It's like how you measure inflation. The inflation the way if you measured inflation the way you did it in the 80s, we'd have 10% plus inflation. So there's a lot of, tricks and gamesmanship that go into this stuff. But if you get to the real numbers, which is, I think, what we really need, I think we're going to find that, what we all know, that this has been a pretty anemic economy in the private sector, propped up by $2 trillion plus of debt spending each year for the last few years. And if we keep that up, we're just going to be bankrupt and it's going to end this whole thing from a financial system standpoint, or we can deal with it. And I said it last year, if we got to take the pain to deal with it to get ourselves in a position to where we can really have a lasting really good economics situation here in the States, I'm okay with that. I manage my trades around that stuff. It's just if that's what we got to go through, we got to go through. But let's get to reality because reality is going to win in the end anyway. So let's get there faster ourselves so we don't have to deal with the real pain if you keep this up.
Here's my thought on this. So since I posed the question, I better come up with an answer myself. I I would think, and again, we're not in the business of predicting the future, but it's just we've seen so many of these market seasons. History does rhyme to some degree.
Yeah.
And what I would expect to see is we've seen horizontal bear markets before. And if you want to see what a horizontal bear market looks like, go back to 2015, 2016. Like those 2 years, the market was started off pretty good and then wham, bam. Like,
Yeah.
we got like back to back corrections on that. And it just couldn't get anywhere. And,
Yep.
like for months at a time, we would just trade in a very small range. And then all of a
Yeah.
sudden something would come along like Brexit or the election, and it took until the end of 2016 before it got out of that range. So that actual time frame, that 18 months and so in that
Hmm.
period, was what I call a horizontal bear market. And
Yeah.
to me, this is probably the most likely outcome for the next 12 to 18 months. So it may not necessarily be like a shock and awe type of great financial recession, great financial
Right.
crisis like what we
It's like a
had back in.
malaise more than anything else, you know?
It goes sideways. You get sort of like back to back to back. If you want to look at 2019, big chunk of 2019 was trade wars, trade wars,
Yeah.
trade
Well, hey,
wars.
why don't you pull up the charts and we can show that because I think
Yeah.
it'd be good for people to see this because remember, there's this recency bias. We've had 2 years of 20% plus returns, right, in the market. So like now the market's what, like up 1% this year and people are freaking out and we're extreme fear. I mean, come on. Like this isn't anything major right now. So yeah, let's just show them what those look like on the charts because the iron condor is a great way to play that, and you can
So
really reap the benefits with it then.
here's, I mean, so if you talk about bear markets, here was 2000, and this was an overblown tech rally that had gone on for too long on no revenue. So we all know why this happened. And this rally that led to the great financial crisis was all based on over leverage and people buying houses that shouldn't have, and all kinds of reasons that we all still argue about to this day. But since then, the only true bear market that we've been through has been this one, which is a classic bear market that we went through in 2022. And that was generally driven by interest rates. And then once inflation started to tame down and go away, and then the rates started to stabilize, the market climbed out of it and said, thank you very much. And we're over. I'm not going to talk about the COVID thing just because that was a one time thing that was not necessarily what I consider to be a bear market. That was more of a evil, vile, nasty correction that
Hmm.
was over with almost as soon as it began. But what I'm talking about here is this period here. Now, it doesn't look like it was very bad. Trust me, when if you live through something like that, bam, bam, bam. Let's zoom in on what this looks like actually, because it's you can't really see it. So it's going nowhere, it's going nowhere, it's going nowhere, and all of a sudden, shock. And then just when everybody's bearish, boom, huge rally. And then everybody's looking to go to the upside, and what does it do? It flushes them out again.
Yeah.
And then just when everybody's expecting a little bit of, stability, all of a sudden Brexit comes along, takes them out. And then we just go nowhere. So it was just a period of time where it's just like you're looking over your shoulder, waiting for the next big flush, the next big, like, what's going to happen next kind of thing. And it wasn't until we got past the election that the market just sort of took off and it never did look
Mhm.
behind itself. So if I had to guess, this is what I would expect through the latter part of 2025. And
Well, the
where,
interesting thing is too with this, we keep seeing it. This we've been talking about this weekly chart energy forever, right? And it still hasn't released yet. And we keep hanging around those moving average levels that I've been talking about, right, on the charts. And it's really interesting to see like even week to week. Like if you look at like from last week to this week on the energy, not much of a move on that energy. It's not really releasing. And so I don't typically count a weekly trend until we get into lower 50s on this thing. But the that energy just kind of is holding steady. And it's like it's waiting for, that the real catalyst. And the more it waits, like for me, it's if this market's gonna crash, go. It's good. Just do it, right? Crash, have your correction because it's got all the excuses to do so. And so it just seems to me like it's waiting for something positive so that it can go higher. Like it wants to go higher, right? On a longer term time frame. And that's some bias, right? Because we've been looking for it to do that, but it just like it's too easy right now. It'd be too easy just to sell and waterfall off from here. It just you have everything you need to do that, right? But yet you keep looking for reasons to go higher.
So look at this. I mean,
So
this is what this is kind of the condition that we're in right now.
yeah,
Back at the beginning of 2015, we had this weekly chart which
yep,
was hugely charged, and so I remember back then at the time I'm like, well, I'm not doing iron condors because this thing is wound up like nobody's business. This thing is going to explode. And so for month after month after month, I'm like, well, I need to be sitting on my hands. And then finally, what happened is I'm like, all right, I'm sick of waiting. And it was right around here when all of a sudden, of course, I get blown out to the downside.
right,
So, to some degree, you have to dance with the one that, you brung.
yeah,
Like if you're going to sit on the sideline and wait for a crash or wait for a big rally from that, you got to wait for it. And literally for months, I mean, so the beginning of 2015 all the way, and I think this was August. I
hmm
think this was like August before. So it was, I mean, it was insane. And we could be going through another one of these situations. And this is why I'm saying, now look at this. I mean, just when you get the energy back again, what does it do? It dumps.
boom, yeah,
So the path of least resistance back then was to the downside. It could not break higher. And it took a new election. It took that getting that uncertainty out of the market before, believe it or not.
yeah. That's what
Um,
I'm saying now. I mean, as much as this thing looked like it wants to go higher, and the path of least resistance absolutely to just give up another 10-15% to the downside. It'd be over pretty quick. I mean, probably 2 weeks, and it'd be over, and that weekly energy be burned out. It'd be really nasty, you know. But it's been more resilient than I expected. I guess is what I'm saying, which is
yeah,
why
again,
I give still a little bias to any good thing comes out, and it may rip up.
yeah. So this is more of like death by a thousand cuts because
Yeah.
what we're seeing is every single day we come along and we gap higher. Like this morning, we gap higher over the weekend. We had great news from
Mhm.
crypto. We gap
Yep.
higher, yay! And the market, of course, knew about the tariffs going into effect tomorrow. That wasn't a
Yep.
surprise, right? Everybody knows it's going to happen. And so as soon as this thing opens up, brrr, straight down. I mean, it's just like,
hmm
and this is what finally, this is death by a thousand cuts. This is what makes traders just walk
Give
away,
up.
give up, and basically walk away from the market and say, I can't do this anymore because every day I see the market starting off higher, I go long, and then I get taken underwater.
Yeah.
So eventually, what happens is this thing will rally, and nobody will be on board for it.
Yep.
So I do believe in your theory that we may get one final uh,
I don't know if we're gonna get new highs out of it,
blast
but
higher.
yeah, I could see us getting a rally that fails before new highs, and then we roll over, and then we put in the real bottom, and I think that flushes it all out. That certainly can happen.
So where's 10% from here? I think it's somewhere around 5,500
Yeah,
in
right
that
around
in
there.
that area. So it would actually involve. We have not tested the 200-day moving average going all the way back to 2023. Look at
I mean,
that,
if you look
the
at that
green
chart
line.
right there, look at it. It's a series of higher highs, higher lows, higher highs, higher lows. You know, so
It's been extraordinarily linear, and we're
mhm.
not, it. So it's made a classic transition to more volatility, but it really hasn't expanded yet. It hasn't made up its mind whether it's going to expand the volatility because when this thing gets going, I mean, guys,
Mhm.
this is what we found is like when you get these markets that do this for a long time. People are not used to when we get into this ATR, like the ATR, people were not ready for this when
Yeah.
we had an ATR over 140 points. People were not ready for this when we had a 100-point ATR. Because after this type of market where it just goes on for a long time, a lot of people started trading back here because a lot of people started working from home. They started learning how to trade
Hmm.
back there, and then they got used to this market. Everybody was going in crazy on SPACs, and then they ran into this,
Hmm.
got blown out because they're not used to 100 points a day, and now we're back to 75.
Yeah.
So even notice this though that this August move that we had, this got us back up to 100.
Yep.
So
Short
it's
term.
it's almost there. It's almost there. So
Yeah, I mean, and guys, it is a different world now. We've said this before because of now like daily options. Like a lot of what's driving things like this and like these crazy moves and stuff intraday are because of that. Like Doc and I can attest back when we had the, monthly options chains, right? Like a 10-point move in the S&P, 15-point move was like a big deal. Like if you got that in a day,
well,
you
that's
know?
because the S&P was 1,000 points, and so that's
Well,
that's a
yeah,
one
and
percent move.
it was, that was like, whoa, something's really going on. And now we're like, yeah, 100 points, 100 points on Friday, 70 today. Like, well, that's just normal. Like, but I think, yes, because of the growth in it, but also because of the options activity now that swings this thing left and right on a daily basis. I think it's just, pretty wild. So,
Well, new lows of the
looks like
day.
we're going back down again.
Yeah, new lows of the day. So we got to flush everybody before the end of the day. So I don't know if there's any news or anything like that. Um,
I'll have to take a look and see if anything came
Reciprocal
out.
tariffs start April 2nd.
Yeah, that's the one from earlier that started all this, but that's nothing that's not anything new. That's what started all this earlier today.
Yeah, this is just Trump reiterating 25% tariffs on Canada and Mexico to start Tuesday.
Yeah, that's gonna start Tuesday.
Oh, the BTC chart. Oh, yeah, that's been interesting.
Yeah, it gave up a lot of the gains, but it still was positive last I looked.
Not by much. We've pretty much eaten up everything from yesterday.
Have we?
Yeah,
Yeah, so now there goes the market, right? So that's so Trump's confirmed the reciprocal tariffs. I think everybody was holding out that those tariffs would be at different rates or whatever tomorrow and everything. So basically, he's added new tariffs on April 2nd for agricultural, and now he has the 25% confirmed on Mexico and Canada. So there's
you
your
know,
confirmation for the
every
market.
every day we come in and look at the expected move in our morning session, and most of the time it's even through like December and January when things were kind of like kind of on the edge, we were maybe about a 30-35 handles, and
Yeah,
for the past week it's been in excess of 40 handles every single day, which is big. That's really big. So
yeah.
every day you've got the market literally on the edge of its chair, not knowing what's going to happen. And so
That's some wild action, man. Look at that. It's just bye bye. Maybe this will be your shot over the bow washout today.
that alone is let's see, a that's a 40-point move that we've seen just while we were talking here.
Crazy. Um, Are we trading any cycles that are repeating the 1 to 3 VIX spike reversion cycle that we've been generating? It's hard to say that's the pattern and stuff like that. I've been just trading, real small, the small iron condors basically on, basically 10 to 14 day cycles in this. Easy to manage, you bounce them around if you need to, but like I had to manage a couple today and stuff and one here a little bit ago, but I've got a big pile of cash on the sidelines right now because it's just I can make, what I want to make in the meantime, but it's just not worth it to plunk a bunch of cash down without a true, true edge, really. I mean, look at this morning. This morning, the market opens up, higher and everything. And so people are positioning for it to run and after Friday and all that stuff. And then one announcement comes out and you're giving it all back. There's just no edge. So the way to smooth that out is just to not play in that and just bracket it, and just stay outside the melee and let it do its thing. So that's kind of how I've been just playing it, looking at it, and not having to try to be right, you know. So for me, that's kind of my thing right now.
Do you think there's going to be any kind of surprises that come out of tomorrow evening's address?
I mean, I don't. It's Trump. I mean, I'm sure there's gonna be something. Like I saw his announcement earlier. He said he's gonna something to the effect of he's gonna lay out all the truth or whatever tomorrow. So I mean, I would imagine he's going to give a very sobering analysis of where this country's at and what's been going on from him coming on. I'm sure he's going to, you know, highlight everything the last administration did that, is in his eyes wrong. And then I hope he does put a really positive foot forward though and says, okay, so we got that out of the way. Here's how we're fixing it, and here's what it means to you, and here's what this looks like in 3 months, in 6 months, and so on. I think if he does that, it actually could be a positive catalyst for the markets.
Yeah, we
Um,
have we have a into Wednesday's close. We have a plus and minus 90 handle expected move, which
yeah,
is
I believe that.
that's normally what we would get on a volatile week.
Yeah,
Is
like a Fed week.
Yeah, like a Fed week, we would get about 90 handles plus and minus. And during a quiet week, we would normally have plus and minus 50 handles. And so
Right.
just into Wednesday. And then, of course, when we factor in the jobs report, we've got 123 handles into Friday, plus and minus.
Yep.
So
So.
good times. May you live in interesting times. That is, what is that, a curse or something like
Yeah,
that?
and I think right now, guys, I think the way you got to approach this market is understanding that there's no real edge, right? So there's no like strong trend either way positioning itself right now. There's no real reveal yet of where this thing wants to go, and I think as much as you can, if you can bracket it like, I put an iron condor on today that's 300 points, it's just a little over a week out. It's 300 points either side on the S&P, right? So that gives me plenty of room to deal with it. Can we get there? Can we move 300 points down or up? Yeah, we probably could over the next 7 to 10 days, but I've got a better shot with that than trying to time anything intraday. So I would, keep your powder dry. Let this thing kind of play itself out. Honestly, in some years, it only takes me a couple trades to hit my goal for the year if I do it right. And so um, don't trade to trade. Don't rush to throw money in if your money's not, working for you. It will work for you. That's something that I think a lot of traders fall victim to. I got money sitting there and it's not working for me, so I got to put it to work, and you just force trades. I would. This is not the time to do that. So
Yeah, that's a good point. I mean, this is something I'm always trying to emphasize on people is like, can you give an elevator pitch in 30 seconds on what your edge is in this current
yeah,
market? And a lot of edges can be like, okay, I'm doing mean reversion on a trend.
yeah,
There's a certain edge, that will last for a certain time on that. And
right,
that's great, as long as it's a linear market. If there's no
yeah,
linearity to the market, you have no edge.
yep,
And like right now, a lot of people are saying, okay, well, I'm selling premium. Well,
yep,
okay, that's fine. But what happens if the volatility expands
hmm,
beyond what you're used to? What if we get, an expansion of volatility, which
yep,
is not going to help you because most of these trades are short vega.
yeah. Now you got to
So
stay in longer.
yeah,
Yeah,
stay in
you lose
longer
that
or you're
edge.
going to have to defend it. So,
Yep.
okay. Any other questions while we're here? And of course, for those of you watching this on the replay, let us know if there's any questions we can answer for the next session. Just send us an email at support at 12minutetrading.com.
Yeah, I think this is one of those weeks that just kind of keep it cool. Stay on the side. Minimal trades. Let it kind of play out. Let this trade stuff get done over the next few days. Let the jobs number come out and all that stuff, and then we'll get into the normal cycle of CPI and all that type of stuff and everything. But I think by the end of the week, market will either either yeah, I'm thinking it could decide which way it wants to go. So we'll see.
Yeah, rates are going down
Can I go
today.
over my trades and adjustments for my recent trades? Well, I put out my alerts earlier today and Friday, and then the one before this. So basically, guys, I'm doing like two wide SPY, trades, making about 7-8% on those things, return on risk, bracketing the market, right? So I had a couple that got really, yeah, here we go. As far as fast as things fell, I adjusted them down Friday. It came back up, and so I had to make some management today. So I'm just pushing those out. I just before this pushed the one out till Friday, right? Just this Friday, because it was market opened above there this morning, crashed back down through it. So it's just like push that out. I got a few pennies for that actually in credit when I did that there. And I'll sell the call side on the next bounce higher just to make some more money on it. But overall, it's three trades I'm really working. That's all I really got out there right now. And just just managing them around it. But you got to be careful because of like what you saw Friday. That the rallies will come out of nowhere in this like that. So you have to just be ready for that stuff. So I'm trying to balance it and everything else. Keep even. I think after all said and done, I'm still about break even on those trades. So I may be able to eke out with some call sides when I add them a little bit more credit on those. But I mean, we had a nice run of like 50 trades before we had any of those that all won before we had any of those issues. So I'll take it. It's happened. It happens. And if I got three, I got to manage. I'll manage them.
We're only about 15 handles away from retesting the lows on Friday, so that
Oh
may
yeah,
be,
we're giving it all back.
yeah, that may be the big target here is to,
Hmm.
any green candles are illegal. How dare they?
Yeah, it's rough. So, hmm. Okay.
Okay. Well, everybody,
All
thank
right.
you very much. Appreciate you joining us here
So, hey,
today.
Rob, real quick, 3x is my trigger to do something. It's either close it or it's manage it. With the gaps that are happening this fast, it's not like it's getting to 3x, it's through 3x right now. So I got to manage it because otherwise my max loss that I want to take on one of those little trades is just 3x of the total credit I got. So it's really two trades worth of loss, because I do them almost every day, right? So, but when it gaps through, like we're seeing right now, a market just crashing, right? You can't do anything in time to get out of it. So you got to manage it. And so that just triggers it. I got to manage it and deal with it. So, yep. Cool.
Okay. Thanks, everybody.
All right.
We'll see you next Monday. Monday.
Hmm.
All right. Take care, folks. Bye.
Bye.